Breaking news. The Taliban are currently supplying America with weapons for an exponential amount of price. Now, to put some context behind that statement, what I'm referring to is hedge funders helping each other out by providing shorts to bail them out of specific stocks like NAKD, like AMC. What is currently going on is hedge funders are going to their enemies to try and get shorts to be able to bail them out. However, what's actually going on is obviously the other hedge funders which they're currently buying stocks from are their enemies. They are in competition with the shorts that they're trying to take out from the other hedge funders, right? So what's currently going on is like the USA going to Al Qaeda or the Taliban that they've been in a massive war with for so long and asking them for a supply of weapons, and obviously they're going to agree to it, but they are going to economically crush the USA in order to get those weapons. That is what I'm referring to when I talk about hedge funders going to each other and helping them supply shorts to continue to bring down the stock and to almost, battle against us retail investors. Now, you may be wondering, Sam, why did you compare those two things? They are not remotely the same. Well, it is in a sense because it is comparing the two people, so buying from the enemy. That is the key phrase in what I'm trying to promote to all of you at the moment. At the moment, what we are seeing is we are seeing enemies coming together to try and fight us retail investors, but at the same time, the enemies are going to be trying to economically crush the other one because they're in direct competition with each other. So an example of the hedge funders working together is when Ken Griffin from Citadel and Cohen's .72 Asset Management invested a combined $2.75 billion into Melvin Capital to help them out during the GME squeeze and to try and bail them out of a very difficult situation they're in. As we all know, Melvin Capital lost 30% of their business overnight just from the GME movement that was going on. And what happened? You had Citadel's Ken Griffin come to the rescue with Cohen's .72 to try and bail them out. And that is what we are seeing in today's day and age. We are seeing hedge funders almost work together to try and help each other out by, enemies coming together to try and stop us retail investors. However, the only reason they are doing this is because they, like us, they have a common enemy, right? And that enemy is us, right? And in addition as well, our current common enemy is them. And it's sort of two war fronts going together to try and take down right, this is a good example, right? So say us retail investors are Germany, right? We are Berlin in World War II. These hedge funders are like the United Kingdom and France and the USA all coming together to try and fight that powerhouse that has been going on at the moment. And very similarly, how the United Kingdom, France and the USA tried to push Germany back into their country and trying to win the war. That is what we are seeing between these different hedge funders and other firms all trying to come together to try and take the retail investors down. However, in doing so, they are negotiating between each other, but they will be getting beneficial deals with each other. So, for example, when Ken Griffin did a $2.75 billion bailout to Melvin Capital with Cohen's .72, what probably happened is they got a very, very good deal out of it because they were negotiating with another country, right? And that country was in need. They were not in the negotiation power. They did not have that negotiation power. So what happened was probably Ken Griffin and Cohen, they probably all got very, very good deals, in a sense, to bail out Melvin Capital. And they probably own a nice percentage of that company currently, right? And that right there is the message of the story. It's the big guys all trying to take down the little guys. It's the giants versus the little guys, right? And that has been how the market's been running for probably most of its existence, really. There's always been a lack of transparency. We have not been able to see within the dark pools. We've also had naked shorting that's been very, very visible, but has not been investigated thoroughly yet. So there's a lot of different things that haven't really happened which need to happen to have a fair market. Okay, NAKD Army, currently on your screen right now, you can see there has been a massive amount of institutional investors all trying to jump in. And actually, it's worth mentioning that these are competition of Citadels and other hedge funders that are currently very, very much in deep waters on NAKD stock, right? You have Hightower Advisors LLC, Parallel Advisors LLC. We have so many different hedge funders and firms all trying to get into the NAKD movement to try and push it forward even further. Currently what you're seeing, for example, Texas Yale Capital Corp. They currently have 111,000 shares of NAKD. They are all trying to now jump in on this because they see the potential, and also as well they probably see the potential of NAKD as a business fundamentally as well. Like I said, NAKD has the best fundamentals out of all the meme stocks currently, right? And it is definitely the most undervalued asset currently, probably almost on the market at the moment. We are seeing these big institutional investors now starting to come in, start reeling in the shares and really trying to increase their portfolios and to make a lot of profit on the stock. They would not be getting involved within NAKD if they didn't think there was going to be money involved in it. So that is why that's why they're investing currently within NAKD, because they see big money opportunity. Now, on your screen right now is Ortex. You know, I pay for this site, so I thought, why not use it properly, right? So let's have a quick look and see what Ortex is saying in terms of the short interest of NAKD. Currently, you can see the estimated short interest percentage of the free float is 4.13%, which is slightly less than before, minus 3.05%, which is fine. That's to be expected, really. However, the utilization has dropped a little bit. It was at 100%, but is now at 98.76. But again, that is good. We are heading in the right direction. We want as much utilization as possible because that means all the shorts are currently on the market that could be, right? In addition, a very, very fundamental factor is something that is definitely worth mentioning is how the cost to borrow is constantly going up. This stock should not be shorted, and that is why it's becoming a lot more expensive to buy NAKD as a short position. And in addition, the days to cover as well for the stocks on loan has gone up to 1.03. Now, for days to cover, we want this as low as possible. So we want to keep trying to bring this down and keep putting the pressure. But because we haven't had that retail volume currently within NAKD, we haven't had those 100 million days of volume. That is why there's not as much pressure on the hedge funders to buy back these shares. So that's definitely something worth mentioning as well. But as you can see, everything's still in a very good spot for NAKD to have a very, very lucrative squeeze, in my opinion. And it's also worth mentioning as well, nothing in this is to do with the dark pools or potential naked shorting. I say potential. I can't stress this enough. There may not be naked shorting, right? Although we all think there is, there's no evidence that suggests there is. So I just wanted to make that entirely clear. But there is evidence of dark pool manipulation. So that we can actually say. But in terms of the naked shorting, I am not putting myself out there saying there is naked shorting. But in my opinion, it looks like there is. But again, that is all my opinion and not to be taken, well, it's to be taken with a pinch of salt. So within your screen right now, you can currently see a graph which I've drawn up, and I've had this for quite a while. We are currently within a bullish flag, and we have been for quite some time now. Everyone was freaking out when we saw the price actually go back up, and they were almost deflated as the stock price came back down. But I wanted to just bring this up that this is normal behavior, and as you can see, when it did shoot up, it was just testing that resistance level, and then it came back down to retain in that bull flag. Now, what are we going to see? By the 10th of August, according to this flag, we are going to see either a boost back up to around the 60-cent mark, or we may drop down to our crucial 48-cent support structure. In my opinion, because we've been testing that resistance so much, I think we may actually press into the 60-cent mark again, and potentially even higher again. As we know, once you escape out of a bull flag, there is potential for a big run after that. But you know, I'm saying 60 cents sort of to cover myself, but I think it could even go up more if it does come out the other end and test that resistance level and breaks out of that resistance level. According to the VWAP as well, you can currently see the VWAP has been slightly bearish the last little bit of yesterday and moving into the pre-market. But again, we are starting to see that creep up again in that VWAP. So that's definitely something that we need to pay attention to. The exponential moving average you can currently see on the 10, the 5, and also the 20? Yep. So on the 20, the 10, and the 5-day moving average, you currently see we are literally level with it. And what I think we're going to see is we're going to see some nice positive action with that, because in a sense, we are actually currently a little bit bearish or bullish on the exponential moving average because we are trading lower than, and we have surpassed those days of the exponential moving average, the 20, the 10, and the 5. So that means that I think we're going to break out into testing this resistance level again today. And also as well, you can currently see on the 120-day exponential moving average, we have been testing that as well. We saw a little bit of a breakout actually above it. So definitely something worth mentioning, definitely something to look at. In addition as well, I wanted to test the BOLL, which is like how much buying pressure and how much selling pressure is currently being in the market. And as you can see, we're currently been trading a little bit up. So we have had a little bit of overbuying, which is positive for the market. It shows that we are currently moving forward and we are getting that volume in that we ever so need. In addition, we'll have a look at the RSI real quick. So the RSI, you can currently see, the RSI is a little bit bearish at the moment, 46, slightly oversold, but again, that could boost up at any given moment, potentially pushing again to that 60 mark and seeing a nice little bull run again. Yeah, that's the analysis of NAKD, and I hope you've all enjoyed this video. If you have, please remember to hit that like button and subscribe if you're new. It helps the channel out so much. And without further ado, ladies and gentlemen, have a great rest of your day. Take care.